Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Treasury Secretary Scott Bessent says the US is open to discussing the use of Nvidia chips with China.
Plus, China's Tencent shows fast growth across its gaming and ad businesses and plans for smart AI spending.
And our conversation with the CEO of CoreWeave after its earnings. We discuss how the company plans to scale to meet AI demand.
But first, we check in on these markets that are very close, if not at record highs. Once again, Ed, we drive higher, and it's more about Federal Reserve policy. Will we get a mega cut coming later in the year? Nasdaq 100 clings to gains, but we are near a record or at a record high. So too for Bitcoin, up 0.7%. ETH is higher too. We now have $4 trillion market cap for the entirety of the crypto market, just about the same size as, say, Nvidia. What are you looking at?
Yeah, I'm looking at Nvidia and AMD. Now, I'm going to be really clear here. It's really hard to see the catalyst, a causal link for why Nvidia's down a percentage point and AMD's up 4.5%. Social media volumes for AMD have quadrupled in the last hour. People are talking about it. There's a reason why they're talking about it. It's because this is what Treasury Secretary Scott Bessent told Bloomberg's Anne-Marie Horden earlier today.
We would not sell any of the advanced chips. So the H20s, I don't know whether you'd say they're 4, 5, 6 levels down the chip stack. What we do not want here, Anne-Marie, is for Huawei to have a digital Belt and Road. Right. So we do not want the standard to become Chinese across the world or even in China.
Let's understand this administration's policies for chip makers and speak to Bloomberg Surveillance co-host Anne-Marie Horden, who just conducted that interview. The underlying assumptions changed, actually, this week, whether or not China even wants America's reduced power chips. But what I found so interesting about the content of what Bessent was telling you is that they feel that it's not really even a national security concern. They're very clear that these are lower performance chips and they want American tech to be present there. Give us the digest of what else he said.
Yeah, that was really his answer to my question of what do you say to critics that basically think this administration is putting revenue in front of national security concerns, that export licenses now look to be seemingly for sale. He said that the H20 chip, and I guess similar to AMD, the MI308, is 4, 5, 6 stacks down from that higher level chip, and they're never going to allow China to get to the higher level chip. He almost sounded a little bit like someone you speak to often, Ed, when it comes to Jensen Huang, about what it means to make sure that Nvidia or AMD have a footprint in China because they don't want Huawei to get control of that. And the big question mark is now is that what is the appetite in Beijing for these chips, given the fact that there's been this new urgency since the administration is allowing these export licenses once again from the CCP to send out these letters to firms telling them to snub these chips and go for some of their own national champions. And this is something the Treasury Secretary told me and Jonathan that he is going to bring up with his Chinese counterpart.
Anne-Marie, what's also interesting is he also told you and Jonathan that maybe this could be replicated. At the moment, it's unique, he mentioned, but maybe it applies to other chip makers, other industries?
He said it's a unique model, something that the president likes to do, try different things. But yeah, that's something that caught me off guard as well, or something that we've been also just exploring every day with guests, whether or not this is new rules of engagement and rules of the road for corporate America. Can other companies potentially strike these types of deals with the United States, or maybe the other way around? Could the Oval Office and the president tell other companies, if you want to gain access to a market, we're going to have to get part of that profit?
Right.
Because what's going on right now, and this has been a really long saga, we should note, for the H20 chips. Remember in April, there was an export ban on these chips. Then this was reversed. In the meantime, we had U.S. and Chinese counterparts to having trade negotiations, and a lot of people glean into this, and the Treasury Secretary told me in a previous interview this H20 certainly was a chip part of the mosaic of these trade negotiations because the U.S. needed rare earths. And now that the U.S. has lifted the export control, instead of just allowing the export licenses to come back, it seems the president struck this deal one-on-one with Jensen Huang in the Oval Office. Reported the president threw out 20%, and then Jensen Huang said, well, how about 15%? And then what does this mean is a big question for other companies and corporate America down the road.
The very quick question is what happens next, right? Because Treasury Secretary Bessent, on top of what the president said earlier in the week, says that they'll discuss the idea of unenhanced Blackwell chips, essentially, with China. He leads talks. Just very quick, what does happen next?
Well, I think it depends on the leverage in these negotiations and what the U.S. wants to get out of China. We also had the president the other day talk about the purchasing agreement he struck in his first administration when it comes to things like soybeans. There is now a 90-day extension, which brings us to November, for these trade talks between these two counterparts. And in my previous interviews with the Treasury Secretary in July, he talked about how now there'll be more of a frequent cadence between him and his Chinese counterpart to have these discussions. All of this likely will lead up potentially to a meeting between Chairman Xi and President Trump, either on the sidelines of the APEC summit or even maybe the president going to China.
Bloomberg Surveillance co-host Amory Hordon, it was a brilliant interview. Thanks for breaking it down for us. Let's delve more into the corporate implications. China, US, the AI competition. Later is with us, Allianz Bernstein, joining us now. And I'm really interested as to how Allianz Bernstein thinks about pricing this in, if at all. How are you looking at the opportunity to access the Chinese market going forward?
Well, I think China has always remained one of the most strategic markets and will remain so. And particularly in the AI world, if you think about AI, how we think about the scale benefit, right? The ecosystem. U.S. has always been, for a big part, the origination of innovations, particularly technology innovations. But China has done a phenomenal job in terms of using it and then using it at a very large scale. When you think about in the AI context, having an ecosystem globally is a very important strategic advantage long term. The more data you have, the better the model becomes. And that's not just for China alone, but think about globally. Who wants to be the dominant standard? Having the operating system, that layer, is very, very strategic for most companies longer term. So that's why we're thinking, that's what Jensen said, that's what Lisa Su at AMD said, and then I think that's how we're thinking about it, which is who will be the dominant AI standard? We want to have a one global ecosystem, or are we going to have different forks into the future?
But these so-called dumbed down, I mean, President Trump even called them obsolete chips being allowed into China. Does that ensure that they remain part of the tech stack?
Well, it's too early to tell for the most part. I think necessity usually drives innovation. So when we don't export anything, then it probably is a greater incentive for China to develop its own domestic ecosystem that's completely separate. So this is a bridge, I think, in my mind, that we can bridge that big, drastic action that we've seen early on this year. I think China does have advantages to some extent, and it has a more newly developed power infrastructure system. It has vast amount of data, and it's developed a lot of these open source, models that they are really rapidly pushing. So it remains to be seen, but I think it's quite important and quite strategic for the US companies to think about the global standard. Think about iPhone, for instance, right? Yes, the iPhone or Tesla, the data resides in China, we respect that. But that said, there's still lessons that we learn from adoption. At this point, if you think about a lot of the AI models, we've trained a lot of data already, but going forward, the use of AI, the use of applications, and that's new sets of data that's constantly being generated, and we don't want to not have access to that.
Lei, the Treasury Secretary indicated to us that this pay-to-play or quid pro quo of a revenue share in exchange for access to the Chinese market could be expanded. What I want to know from you is if that were to be the case with high bandwidth memory or telematics or other parts of the server design, would you then upgrade your overall outlook for in megawatt terms or gigawatt terms, the amount of installed capacity we could see around the world?
I think it's too early to tell. I think as you've seen from a policy standpoint, there has been quite a bit of fluidity in terms of the changes back and forth. But I think it's certainly promising that, some of the really drastic assumptions that we had in April, some of it's being discounted today. So it remains to be seen. And I would say it's very early, and I would refrain from making any assumptions, whether too aggressive or I would say it is definitely an improvement from the worst case scenario.
Lei Chu of AllianceBernstein, thank you very much. Now, coming up on the program, Tencent says it'll boost its AI spending after posting a revenue beat. We've got more on that next. The US ADRs, the US listed shares up almost 7%. This is Bloomberg Tech.
Shares of Tencent, well, look, they are rising today after posting second quarter revenue that beat analyst expectations. The company says it plans to accelerate spending on AI research, will focus on integrating it across its services, across its content. For more, Bloomberg's Henry Wren joins us. And what's interesting, though, they said they're going to invest smartly. So this is prudent CapEx, it feels like.
Yeah, thanks for having me. And it's pretty interesting because when you look at their CapEx budget for the quarter, they spent about 19 billion RMB in a quarter. So that has been, you would say, a fraction of what US tech giants have been spending. And on the call, they mentioned that they will be spending on AI chips. That's a priority. They'll also be recruiting talents. However, they will adopt this more prudent approach. So it does seem that they're not in a rush to spend as much as they can. They say that they have enough AI chips for now. They say that their stockpile is enough for training and for inferences, and that's probably why.
There is some skepticism from the analyst community in the same way that they look at the American companies on how CapEx translates to top-line growth anyway, specific AI growth. But in the quarter gone, there are just parts of the business that are doing well. Where's Tencent strong, Henry?
Yeah, I would say they're firing on all cylinders for this quarter. So games has been a standout. International games grew by about 35% in a quarter. They launched some new games, including one called Dune Awakening in international markets. But domestically, it's about their evergreen games. So we're talking about the Peacekeeper Elite, which is a 6-year-old game. The company said that it's gaining traction because of a new game model. That game saw a 30% increase in user volume for the quarter. That's about games, but on ad revenue side, it's growing very strong as well, 20% increase for the quarter. The company said it's benefiting from AI tools being adopted over there as well. So it's basically strength across the board.
Bloomberg's Henry Wren, thank you very much. Let's get more and bring in Jacob Cook, co-founder and CEO of WPIC Marketing and Technologies, an e-commerce and technology consultancy focused on the Asian region. Somebody asked me a question earlier today that fits into the Tencent story so well, which is we've been so focused on the movement of chips across borders, or a lack of. We haven't really talked about the movement of software, right? And when I think about Tencent and the gaming portfolio in particular, are there Chinese domestic companies that are getting international foothold across e-commerce, gaming, and other digital businesses?
Yeah, definitely. I mean, even Tencent is one of those with their big investments into Shopee, really kind of being a top leading player in Southeast Asia in terms of e-commerce. But yeah, I mean, Tencent is there taking a lot of the advertising dollars, that are coming from that big e-commerce boom inside China as well, too. They're not so much of a player as say, Alibaba, in terms of the B2B software that they have a whole suite of. But, in terms of the advertising, becoming a bigger and bigger player in that part, we saw that revenue also up by 5% this quarter.
The theme from Meta's earnings, if there was some softness in advertising, it was a pullback of Chinese advertisers in the European region in particular, perhaps in the United States, because of the geopolitical environment. I'm trying to read through what's going on with Tencent, and I just don't see that macro level headwind. Do you?
No, and I think that really what you're seeing, though, is because a lot of that advertising is still based in China, that, we're coming out of a year of pretty big stimulus in terms of the government and e-commerce spending. So we should naturally see that trickle down come into about now Q3 and Q4 as well, being pretty strong in terms of the advertising dollars that they're coming in. No, they never really had that major post-COVID stimulus in China, and they waited a little while. So we're seeing good numbers now, and we would expect that they would hold because, low inflation numbers in China as well. It also bodes really well for the consumer. So we're pretty excited about Tencent's earnings, and we think that probably you're going to see some pretty more good news from the e-commerce providers in China in the coming weeks as well.
Yeah, we brace ourselves for Alibaba later in the week, for example, Jacob. I want to hear how much access they're having to GPUs, how much AI and generative AI might be held back by ultimately the infrastructure they need. It sounded as though, once again, Tencent trying to say, we've got all the chips we need for inference, we're not worried about it. They wouldn't go into the nitty-gritty about Nvidia access, for example. But Jacob, is it a worry?
Well, I mean, we've all been saying this, but we've now seen, 3 successive, like the QN model exactly from Alibaba that's now not leading, but certainly up there in terms of its ability to code. And they're going down a little bit different path at Alibaba, and DeepSeek as well. I mean, all of those models are competing internationally despite the chip ban. So if Tencent comes and says that, they have all the chips they need, there's no reason not to believe that.
More broadly, the geopolitical context. It doesn't seem to be knocking the wind out of any of these Chinese companies' sales. I mean, they've all recovered significantly from their lows.
Yeah, and I think that one of the things, for us that are boots on the ground in China, there is the really high-level government that where the relations are not great and we see the headlines. But, for boots on the ground and for the local level, it's actually been very, very strong. People-to-people connection is still very good over there. And there's still a lot of businesses that are setting records, international business that are setting sales records in China. So, there's the headlines, but actually on the ground, I think people have been doing business over there for quite a long time. Relationships have been built up over decades. So we're kind of expecting this to blow over, just like it kind of did with the first Trump administration, and people will get back to business.
You still have a president that, in a press conference, is talking about a pay-to-play arrangement where the CEO of the biggest company in the world, Nvidia, has gone to him and agreed to a revenue share, right, to get access to the Chinese market. In a tariff or a trade dispute, in China, does the same thing happen? Do you have the leaders of these biggest technology companies talking about and acknowledging their government's policies in the same way and vice versa?
Well, no, you don't, certainly. But, I mean, there's almost the exact opposite approach. I mean, there's been an export tax credit out of China for a long time, too. So it's almost like they're going the other way and trying to reduce prices for international consumers as opposed to the strategy of essentially taxing exports. So, no, through all these things, like we said, no one's really had a problem getting access to what they've needed to get access to, and pricing seems to be okay in the Chinese market. So, yes, there's going to be some headwinds. Q1 was, particularly tumultuous in the U.S.-China business cycle, but, we've been through this before, and we're probably going to get through it again. And the numbers, I think, are starting to say that we're probably getting over the hump here.
We'll see how the rest of the earnings come through for these Chinese giants. Jacob Kirk, it's always great to check in with you, the CEO of WPIC Marketing and Technologies. Now, quick check on the broader market. We're actually falling into negative territory. Nasdaq 100 had been in a new record high, so too had the crypto space. We're now down by about 0.1%. We're still digesting, of course, where indeed Federal Reserve sentiment will go, the market pricing in some big cuts coming in the rest of the year. We wonder what that means for the rest of the broader market and tech ed.
All right, coming up, all eyes on Bullish, the Peter Thiel-backed crypto player that's about to start trading on the New York Stock Exchange. Today, this is Bloomberg Tech.
Crypto company Bullish raised more than $1 billion in an IPO, pricing its shares above the marketed range. And the digital asset exchange operator and also the owner of media outlet CoinDesk sold 30 million shares yesterday for $37 each. Bloomberg's Anthony Hughes joins us as we await the company to actually start trading on the NYSE. They're indicated to open $65 to $70 each. That not quite double, but it's another big pop for another hot retail IPO, it feels like.
Yes, we've had a number of strong IPOs recently, obviously Circle in June and then Figma a few weeks ago. So this is really directionally a very similar story, and we've seen very strong demand. And we reported earlier today that there was north of 20 times oversubscription levels for this IPO, and that a lot of institutional investors got no shares in this offering. And from all accounts, there's been a lot of action amongst the retail brokers who got a little bit of the stock as well. So yes.
Yeah, NT, I don't know too much about Bullish, but I was interested to read that, like, across co-founders and board members, they're taking a big chunk of the shares, or have a big chunk.
Yeah, so from what we heard, that when the shares are allocated here, that people who had a relationship with management did receive some of the shares, and that's not completely unusual, but often with these hot IPOs, you get management having a big say in the allocations because they want to place the shares with, I guess, people who they think will be long-term supporters of the shares, or long-term supporters of the company, or they may have other reasons for giving them the stock. But certainly in this case, that seems to be something that sort of is, it's quite, a big a major aspect of the way in which the shares were allocated here.
Brendan Bloomer, Block One CEO, co-founder, he's going to be the biggest holder, about 30%. ARK gets a cut, so does BlackRock. What's interesting, though, is to think about how Tom Farley became the CEO. Originally, it was because he was leading a SPAC, a special acquisition company, that was going to buy and merge back in the day for $9 billion. This is a strong IPO, but it's not $9 billion valuation. It's interesting, we saw Circle have to do the same. Their SPAC unwound back a few years ago. Then they come back to the market and IPO strongly. eToro, another.
Yes.
They are managing to come, but not perhaps at the heady valuations of the past for a Bullish.
Yeah, although I think in the case of Circle, it quickly reclaimed that SPAC valuation and went much, much higher. So, it is really interesting that a lot of these SPAC mergers back in that 2021 era that fell over for reasons that were partly to do with uncertainty around the ones that were crypto related, and there was uncertainty around crypto regulation and aspects like that, but also there was just a big sort of sell-off in a lot of growth names as well in that period. So, it just tells you that we're sort of somewhat back to that sort of 2021 period, not quite as extreme as that, but we're certainly in a situation, in an environment where we're looking at sort of lower rates and the market at record highs. We're sort of starting to get a lot of hot money in the IPO market, but also a lot more IPOs are probably going to come in the later stages of 2025 as well.
We're waiting for trading to start, but Bullish shares indicated open somewhere $60 to $65 each after pricing at 37. Bloomberg's Anthony Hughes, thank you very much indeed. Kara, there's a lot going on in markets. Circle down 4% again, another kind of post-earnings story after we spoke to the CEO yesterday. More broadly, kind of treading water a little bit.
Yeah, it's interesting that Circle had actually said they were going to be selling more shares, so maybe a little bit supply issue of dragging it down by 4%. But next, we're going to be hearing from the CoreWeave CEO, Michael Intrator. Your great conversation, Ed. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Check in on these markets, which are flitting between gains and losses on the Nasdaq 100. We're currently just off by 8 points, but we are near record highs. Once again, all eyes on the Fed policy, whether we get the big cuts. It's helping crypto. We're up 0.4%. We're coming down from the previous highs earlier in the session, but still at 120,000. You're at a record high, and the market cap of crypto now $4 trillion. About the same as Nvidia. Let's look at Nvidia. Let's look at the chip stocks more broadly, Ed, because they are in the eye of the geopolitical storm right now. Nvidia off by 1.6% after we, of course, digest really what a 15% payment on all your H20s to China really means to the business, how much that's going to extrapolate into China not wanting those chips. AMD, though, up 3.7%. Interesting difference here that we're seeing in the two key names. I'm looking though also at Micron, off by more than 2%. Ed, you've been pointing this out. Now remember, it has rallied the 4 days prior to this, almost 20% after it pre-announced some of its numbers. They look strong in DRAM. But interesting reports, of course, that they are laying off people in China at the moment.
Let's look at another mover, and actually this decline has massively accelerated. Shares of CoreWeave are now down almost 19-20% in the session. They'd been down nearer to 10% after the company posted a disappointing earnings outlook. Margins are under pressure from this kind of rapid AI data center expansion. We spoke with the CEO, Michael Intrator, earlier today. The message was training demand sustained, inference demand fast growing. Listen to this.
We continue to see massive demand for training, right? Like that hasn't abated in any way. But what you're seeing is a continual cranking up of the demand for inference. And we see it within our portfolio of data centers, because when the compute is being dispatched, if it's being used for training, you'll see a step function, right? The training job begins, it runs, it steps down when it's over. But when you're viewing the compute being used for inference, what you see is a much more gradual increase and decrease as you move through the day, as people begin to come on and off their demands for artificial intelligence. And we haven't lost demand for training new models, but we have been incredibly pressed across the industry for compute for additional inference capacity.
What's the percentage split inference training for you?
The last time I looked, and it does move a lot, it was over 50% for inference at this point.
Okay, that's an interesting change, because I think I ask you that quite regularly, and it seems to be at that mark. The thing that I've been thinking about a lot recently is the aging GPU. Yeah. You know, basically Nvidia commits to that change, right, on an annual basis. In the context of the demand picture you just outlined, but also what you're trying to do in scaling, how do you keep up with the aging GPU scenario?
Yeah, look, what we are seeing in our infrastructure is a consistent movement of the newest iterations of architecture that come out of NVIDIA being used to drive the most bleeding edge training infrastructure jobs required. And what happens is the prior generation begins to pick up the load on inference. And you see it kind of passing from one generation to the next generation to the next generation. We are not seeing meaningful declines in the H100 demand, which is the prior generation to the Grace Blackwell that is the cutting edge right now. We're also not seeing any real decrease in demand for the Ampere series, which is even prior to the H100s. There is broad-based inference demand absorbing that compute. It's being picked up into term contracts by many of the same players that are looking to support the ever-growing demands of inference.
Are you diversifying the business, Michael, away from just OpenAI and Microsoft?
Yeah, look, it's a huge focus for our organization. We've made tremendous progress. I talked a little bit about it in the earnings last night as we take on new clients, as we basically penetrate additional layers of the enterprise space. I talked a little bit about how we're not only seeing diversification of clients, but we're also seeing green shoots in new parts of the economy that are beginning to integrate artificial intelligence. And I focused a little bit on two sectors, and it's just two sectors that we chose. The one was the VFX space, where we saw companies like Moon Valley come in and begin to integrate artificial intelligence into visual effects. It's an incredible growth sector for us. We're seeing a lot of new companies begin to ramp there. We're also seeing real developments begin to occur in the life sciences portion of the market. There are, I spoke about Hippocratic AI, and those are wonderful developments. It really is speaking to a resilient broadening of artificial intelligence as it penetrates the economy.
Michael, we've been studying really closely how xAI went about building Colossus and what Meta plans to do with its next-gen capacity. They very much kind of go it alone. And I wondered if you talk a little bit about the opportunity, or maybe lack of opportunity, you see to work with those two names.
Yeah, so Meta's a client of ours, and we are we work with them very well. We think there's lots of opportunities for us to expand our relationship with them and to broaden their use of our computational infrastructure. We think that the work that X is doing at their sites is incredibly impressive. But we believe that ultimately, when you're dealing with the scaling exercise that looks like what is going on within AI, you're always going to wind up using partners. It's just the nature of it. You need to build so much, so fast, so broadly. We're very confident that there's really great opportunities for us to continue to work with a broad set of companies. I spoke a little bit about this on the earnings also, which was, in the last 8 weeks, we've seen 2 of our hyperscaler clients come back and execute extensions and broaden their contractual relationship with us. It's very exciting, and it is representative of space that's broadly trying to address this systemic imbalance, of which CoreWeave is a wonderful solution. We deliver best-in-class technology, best-in-class software stack to be able to allow different users across the space to really take advantage of the infrastructure that we're building.
What a rich deep dive with the CoreWeave CEO by Ed. Michael Intrator there, of course. You can catch the full exclusive interview online, Bloomberg.com, YouTube, or on the terminal, as shares having a record fall today. But boy, they're still triple where they priced at back in March. Now, sticking with earnings, let's talk about Cisco. It releases its fiscal fourth quarter results after the market closed today. Shares just off by about 0.8% in anticipation. But let's talk about what we can expect in terms of the networking growth, the security demand. Bloomberg Intelligence's Woo Jin Ho is with us. These shares have been on a tear for the last year, Woo Jin, as they really seem to be making AI an area that they can lean into as people upgrade their networking.
Yeah, hey Caroline, thanks for having me on. So AI is a portion of the story. I think it is an area of upside for Cisco. The focus right now for me is twofold. Number one, AI, as I had mentioned, and number two is general order growth as a barometer of the health of the broader IT spending environment.
Woo Jin, will tariffs be or not be a factor for Cisco?
Yeah, Ed, that's a great question. I'll tell you, I have to give a lot of kudos to Cisco. They're one of the few companies that have actually baked in the impact of tariffs into their expectations. And, from my perspective, given the latest tariff, guidelines, they've come in lower than what we had anticipated. If anything, there is scope for gross margin upside to expectations. So if it is a factor, it's a positive factor.
Positive factor also, Woo Jin, if you can hear me, is security. They've been leaning into that side. How much real growth are we likely to see?
Yeah, look, at the end of the day, if we recall about a couple years back or 18 months back, they acquired Splunk. And that is supposed to reinvigorate the security and observability growth. That is going to be a low teens, mid-teens grower for the company for this year. And it is going to factor into the guidance. Now, what I'm looking for the guidance is possibly bracketing into the 4 to 6% range for this year, possibly a little bit higher from the midpoint. But security is going to be a main growth engine for them into fiscal 26.
Bloomberg Intelligence senior analyst Woo Jin Ho looking ahead to Cisco, which, reminder, is after the bell this Wednesday. Now, coming up on the program, we got Mitchell Green, founder of Lead Edge Capital and an investor in some Chinese firms, actually broadly active. We're going to talk about Nvidia deal, the quid pro quo, and some other opportunities out in the software space. Caro, what are you looking at? Oh,
some big moves happening when you're thinking about daily grocery deliveries. Amazon is up, currently almost a percentage point. Instacart down significantly after it seems that Amazon will plan to offer same-day grocery delivery in 2,300 cities by the end of the year. That's basically doubling the current number that they have. So this is a marked expansion. Amazon rises off the back of it. This is Bloomberg Tech.
This is a very unique solution, allows Nvidia to expand into China. It can make Nvidia chips the bellwether for Chinese technology, and then the U.S. taxpayer gets a share of that.
Keyword unique. Is it unique to Nvidia and AMD, or is this a model for other companies?
I think we could see it in other industries over time. I think, right now, this is unique, but now that we have the model and the beta test, why not expand it?
Treasury Secretary Scott Bessent joining Bloomberg TV earlier today. Let's talk more about what this unique deal could mean for companies in the US and in China. Mitchell Green is founder and managing partner of Lead Edge Capital. You're an investor in Chinese names of the past, the IPOs of Alibaba, ByteDance you hold, of course, but you're also in many other areas and industries. We heard in that conversation with Scott Bessent that maybe this does apply to other industries, and maybe will this be a pay-for-play more broadly? What do you make of it?
You could figure out how to read the U.S. and Chinese government relations between what they say and what they all do. Please keep me enlightened and inform me, because we're as confused as every other viewer that you listen to. I do think both of these countries' leaders fully know that they need to work together. 150% tariffs on our companies selling to them, their companies selling to us, is just stupidity on all facets of it. We're going to work together. Look clear as it comes back to technology. AI and the implementation of it is very global. I mean, look, I'm talking in my own book here that we're big investors on a dollar basis, and ByteDance obviously very small as a percentage, just given how big the company is. But we think ByteDance is one of the foremost AI companies on the planet.
Is there a worry, Mitchell, though, that if their own government is telling them that they shouldn't really be going for H20s, yes, they're called obsolete by President Trump, but they're not really able to access them as much as they'd like, Mitchell? Is that a worry for the future of ByteDance as the AI powerhouse alongside some of the other Chinese rivals?
I would not bet against Chinese ingenuity in designing solutions and systems around, you saw what happened in DeepSeek. Who knows how much they spent, but obviously they trained a model and used it in independent tests that was, a fraction of a fraction of a fraction what it cost some of these U.S. people to do without, who knows if they had access to these chips or not. I wouldn't bet against the Chinese semiconductor industry. Now, it's not, I'm not sure, we're not semiconductor experts, but I think if Nvidia chips are not allowed over there, or certain chips aren't allowed in there, I wouldn't bet against these companies and these entrepreneurs from figuring out, ingenious solutions around designing them.
Right. The underlying assumption the Treasury Secretary's making is that China wants America's chips, irrespective of how much revenue those companies pays the Treasury or wherever it goes anyway. I actually wanted to ask you about software. Had a funky week here in London, and various European and British software names kind of went down, and Monday.com was at the heart of it. That's the story where it's like no code, traditional SaaS has bad print, and the market's like, oh, AI makes all of this kind of legacy software stuff not very good anymore. Right. Could you explain that to me? You kind of know this field.
Yeah, so it's funny. At a higher level, a lot of these software companies are actually in a no man's land. You have half the investors out there screaming for growth. You have the other half of the investors out there screaming for profits and want to value them on multiples of profits. And it's like this tug of war. The companies aren't growing as fast now because they're really, really freaking big. And the much smaller companies in software are still growing fast because they're just not nearly as big. When you're 2 billion of revenue, it's a lot harder to grow 40% than it is if you're 200 million of revenue, right? I can tell you, we are investors in, our primary business is investing in application software companies. And I will tell you that almost every one of our companies is using AI to become more productive. We have a company up in Toronto, Gravity, that may have, 10 to 15 software engineers. They can now use it to have the equivalent of 45 software engineers and just be more productive. But they're not firing all their software engineers. They need people to work with this code. Our belief is that if you are software that's system of record and you have data, we actually think it's really, really valuable. and I don't have to tell the viewers out there that legacy companies, a lot of legacy companies are going to massively benefit from AI, just like they did with the internet. Like the biggest beneficiary of the internet may have been like, literally the iPhone, people like Amazon and Facebook and Google and Microsoft. It was around before mobile. Like these are the guys that benefited. You know who's going to win? Snowflake, Salesforce, Workday, Datadog, private companies like Grafana, public companies like Toast. Like all of these companies are going to use them to be that much more productive. We think 90 to 95% of the AI application software companies getting built today are zeros. Horrible economics, negative gross margins, burning money like crazy.
Okay, so in a year's time, let's check back and we'll keep track of that one. Mitchell Green, founder and managing partner of Lead Edge Capital. Great to have you back on the show. Caro, some more news headlines.
It is time for Talking Tech now, Ed. First up, SoftBank says it plans to sell $676 million worth of riskier debt. It's known as subordinated bonds, in an effort to fuel its stalled AI drive. Now, the yen-denominated notes will have a final maturity of 35 years and an early call option after 5 years. Pricing expected later this month. Plus, a federal judge has ruled that Elon Musk must face claims by OpenAI that he weaponized social media posts and statements in an attempt to sabotage OpenAI's success. It's an attempt to gain advantage for XAI. It's the latest twist between the two AI companies after Musk accused OpenAI of abandoning its founding purpose as a charity last year. And the billionaire family controlling Porsche and Volkswagen are setting up a new fund with a focus on defense industry investments. Now, the holding company of the Porsche family says the new platform will drop previous requirement targets for needing both military and civilian applications.
Okay, coming up is the countdown onto the end of SpaceX's launch dominance. We'll tell you what these two successful missions could mean for increased access to space. That's next. This is Bloomberg Tech. Two launches blasting off in the last 24 hours. ULA's Vulcan rocket on its first national security mission, and Europe's Ariane 6 completing just its third mission ever. Let's get more from Bloomberg's Lauren Grush, who leads our space coverage. I'm going to start with the ULA launch. Tell me about it. Why is it significant?
Well, this was the third launch for the Vulcan rocket, but as you mentioned earlier, it was their first national security mission, which is really what Vulcan was designed to do. ULA is one of an elite group of launch providers that can launch the Defense Department's most sensitive national security satellites. But this was their first time doing so with this particular rocket. They had to receive certification for it. So first they had to launch two missions with Vulcan to prove to the Space Force that it could handle launching national security satellites. And it actually suffered a tiny issue on its second flight. A strap-on booster had a small explosion. The rocket still made it to orbit, but it delayed the certification process. However, it did receive that certification in March and then ultimately was able to do this launch. And so that'll pave the way for even more national security missions moving forward.
And turning our attention to Europe and Ariane 6, how much is this just countries, entire areas of the globe trying to wean themselves less on dependency from SpaceX and have their own competitors?
Yeah, I think there was a lot of symmetry last night because these were the third flights of both of these rockets, and both of these vehicles are in a similar class to that of the SpaceX Falcon 9 rocket, which has essentially had a de facto monopoly on the launch market for the last few years, at least with this particular class of rockets. So the launches of these two vehicles kind of do symbolize, perhaps there are going to be more options for other satellite providers in the future looking for this class of vehicle. Of course, it's going to take some time. As I said, these are the third flights. They've both struggled to ramp up in terms of their launch cadence, whereas the Falcon 9 is launching every few days. So it's going to take a while for them to reach up, but at least there are more and more rockets of this caliber coming online that satellite operators can turn to.
And perhaps reduce that logjam. Bloomberg's Lauren Grush. Great reporting as always. Thank you very much indeed. Now that does it for this edition of Bloomberg Tech. What a lot of earnings we've still digested and got to come.
Yeah, and a critical conversation with the Treasury Secretary. Recap on the podcast. You know where to find it on the Bloomberg terminal, as well as online on Apple, Spotify, and on iHeart. From London, and New York City, this is Bloomberg Tech.